The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 29th, terrific Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right, folks. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to throw at us. Today, you and I, we'll go take a look at the circumstances of the markets. We'll go figure out what the bulls and the bears, the buyers and the sellers are communicating to you and I. And I want you to know that I'm absolutely grateful for your presence here. But most importantly, I'm here to serve you. So feel free to pick up that phone at any time and dial on in at 877-927-6648. Internationally, 727-444-10 or 445-1044. I'm not sure what you'll get if you dial 444-1044. But if you do dial it, let me know, and then dial the correct number out there. And, of course, this is Terrific Thursday. You are at the Hotel California, sponsored by Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Let's get her kicked off right now. We got the Dow trading down about 32 points at 17,747. The S&P is off 2, trading at 2,088. NASDAQ Composite off 17 at 5,078. Russell 2,000 down about 8.5 points at 1170. I've got gold trading out at 1147. Silver trading out at 1554. Light sweet crude is flat. She's trading at $46. Natural gas just won't give it up. That's trading just slightly lower. We've got copper trading lower. To the upside out here, you got Sherwin-Williams up $11. O'Reilly Automotive up 11. Amazon up 7. Zyrtex Pharmaceuticals up 7. Zimmer Holdings up about 7. A lot of 7s out there. Not 7 exactly. To the downside, Buffalo Wild Wings off 18%, down 34 buckaroonies. ABI OMED, that's off 27%. That's down $26. NXP Semiconductor off 19%. Straight Path Communications taking a straight path, a beeline to the dumpster. That's off 35%, down $17. F5 Networks off $10. GNC Holdings, that's off 26% out here. You've got some stocks, some individual stocks. Just Freescale Semiconductor, it's free scaling to the downside off 16%. That is down $6 out there. So we've got a lot of stocks that are moving to the downside out here. So let's figure this out. Where do we begin our day? Where should we begin our day? Let's go take a look at, I show up here. I don't really have anything planned. It's more free-flowing, right? What's going on in the markets? What is it that we should be taking a look at? Let's go look at intraday charts, get a feel for what's going on there. So we'll just take a look at a couple 10-minute charts here. We can see if there's any message that we can figure out. Left-hand panel, if you're watching us on TigerTV, and I hope you are, that's the ES Mini. That's a 10-minute chart. Right-hand panel, that's the NASDAQ. And really the NASDAQ shows, I think, the larger trading range boundary levels, resistance being the 46.63 area. That happens to be the top of the box of 120-minute profile out there. And support looks like the bottom of the box of the 30-minute profile. So the range here inside the NASDAQ, before it releases any kind of information to you and I, the bottom being 46.45, the top being the 46.63 area. What happens if you break above 46.63? I don't know just yet. We go take a look at some other charts out there, but those are your resistance areas. What we can see here with the NASDAQ, 10-minute chart, though, 10-minute chart still gives us information. We can see that, it's lunchtime. We can see the pause. We can see the small-bodied candles. We can see, in some cases, the long wicks, like this candle right here. This little doji candle. There's only one doji that shows up right here, and that was at about 12:50 to 1 o'clock. Nonetheless, some very small-bodied candles, so it's taking a rest. Let's go to a larger chart out here. Let's go take a look at the 300-minute time frame. Shoot, those aren't telling us a whole lot either. Let's go take a look at the daily. So let's go figure out what the markets are doing. Here we go. So we've got the daily. We've got the four equity futures contracts. We'll go take a look at the ETFs and the indexes and so forth. But as we take a look at the S&P futures contract, what we can see here is that it is made the 1 to 1.2, or very close to making that A to B equals CD pattern. That's our little lightning bolt to help us measure price. 2090. One would be hitting it really to the T. At 2069, we're trading at 2082 right now. So at this stage here, I'd say more likely than not, 2091 is certainly in the cards out there. We're above the 0.786 retracement level. That's from its high on May 20th down to the low on August 24th out here. So 20 and now at 2091, and we're close enough to it, so is it going to make it all the way? I don't know. On a daily chart, is there any reversal signal? Just a tired signal after yesterday, all that work that was done between about 2:40 in the, really, you could say from 2 o'clock till 4, a little after 4. All the work that was being done inside the market. So it's a bit tired. No reversal signal or anything along those lines inside the S&P futures contract. Inside the NASDAQ out here, the NQ, it is still trading inside the swing point from the trading session of July 20th. The high of that swing point, I tell you what it is, but I need to put my my data box up on the screen. There we go. That'll make it a little bit easier. The high of that session was 46.86. What did we get to yesterday? We got up to 46. No, we only got to 46.78. So you're still trading inside that swing point. What does that mean? It says it should go test the top of that 46.86. And if it closes above 46.86, you're looking at 47.19. That would be your 1 to 1.272 A to B equals CD. Now, what you might get, because we're at that stage where it's making a 100% move of a move out here, 100% move of a move. Oftentimes, that's where price really stalls. No stalling yesterday. We'll see what happens over the course of the next few days. If you get a couple of dojis on the daily candle, very small-bodied sessions, I would say, okay, the market is tired. Certainly, it could easily spike up to 47.19, fall back below. Now, it's not a double top or anything. You can't call something a double top or triple top until you see how it pulls back and tests its prior swing point. And that would be a doozy, because that would take you all the way back into September 29th out there. Now, if price decides, well, I don't even want to try to figure out the butterfly pattern on this, because it would be huge out here. Let's take a look at what are the Dow futures doing. So at this stage here, what we know is that it is the really, it is the NQ. It's all about the NQ, because it is it's completing the pattern. It's approximately completing the pattern. Now, it looks like in the S&P 500, not so much. When you take a look at the Dow is actually completing a pattern. You can see prices trading at 17,670. Again, we're looking at the futures contract. 17,681 is the 0.786 retracement. 17,773 is your 1 to 1.272 A to B equals CD. That would actually set up a Gartley sell pattern. Now, it doesn't. It sets up the potential of a Gartley sell pattern out there. Unless you get a bullish reversal signal, that doesn't mean diddly. It just means you've hit a couple of A to B equals CD, or A to B equals CD, and you've hit a Fibonacci level. You need to see, the only responsibility of the buyers and sellers, the bulls and bears, are to paint signs for us. Reversal signs, bullish and or bearish out here. So we're at the stage where you've got to be paying attention and watching for that. We don't have anything like that as we speak today. And don't give me any of this malarkey that if it forms a hanging man, then that's a reversal out there. Just isn't the case. Now, if we take a look at the Russell 2000, the Russell 2000, the futures contracts, what you and I are taking a look at. Russell 2000, was moved higher yesterday with conviction, with volume, wide price spread. If we take a look at the futures contract, though, we can see it hasn't broken out of its descending price channel. A little bit different, I think, if we take a look at the indice or we take a look at the ETF. But clearly, as we take a look at what's going on inside the futures contract, and I've got a little 10-minute delay on this, not because I want to, because I don't want to pay them the $90 or whatever it is they charge me just for that extra 10 minutes out here. And it also has not broken above its September 17th swing point. So even though yesterday was a really extraordinary and nice day out here, it's by far from being out of the woods. And if it can't bust through the upper portion, so you've got basically 3 of the equity index futures contracts are up against or nearing completion points of patterns. Doesn't mean that this can't take out resistance. Doesn't mean that the NQ can't get above its high, and doesn't mean that the S&P 5, the ES Mini won't get slightly above where it's at out there. But we do have 3 of these daily contracts that are completing patterns out here, and that says you've got to be cautious in the marketplace. That just says, make sure that you are using stops. So that's what the daily futures contracts are communicating to us. Let's go back to my main screen out here. And as we take a look at the main screen, what I think we need to go talk about next is probably Goldilocks and silver. So let's go do that. You've got gold, which is trading out at 1147. Gold certainly getting whacked yesterday, was up nicely. I remember 15, 16, 17 bucks. And then it traded to the downside and continued moving to the downside. So we're taking a look at the December contract right now. If we take a look at a couple different patterns for you, one of the things that we discussed yesterday and or the day before was to anticipate that gold would move down to 1141.50. Now at 1141.50, that happens to be the bottom of your TAS market profile. We can see that the point of control, the little blue dash line on my screen out here, is closer to the bottom of the box. That says that should be pretty good support. It also says that if price closes below that level, again, that number for you, 1141.50, then price is going to go make a beeline for the 1125 area. That's what the market profile says. So I would say 1125 to 1141 becomes your next potential target area for a buy on gold. So that's that pattern. I'm going to go ahead and turn this off because you and I, we've got to basically, we're going to clean up our we're going to clean up our chart out here. This way, because I see other patterns that perhaps you see as well playing the home game out here. One of the patterns that I see, which is clear to me, is the rising price channel. We can see lower tops, right? If we just take a look at a trend line, we can draw that in there. We'll draw a green trend line out here. We'll use the green arrow, the green hornet out here. And so, that's a trend line. That's another spot where gold could pull back to. That's in about the 1125 area. I believe 1125, was that one of the numbers? Yeah, that's the weekly. So you've got 2 patterns that complete at 1125. So if that 1141 area gets taken apart, meaning it closed below, you should really anticipate the next level of support inside of Goldilocks at 1125. All right, so that's that trend line. What I also see out here is I see we could use trend lines or we can use channel lines, right? So let's go draw in the channel line out here. In this case, we're going to use the body of the candle versus what we were using, which way we're looking for 3 points of contact. And voila, looks to me like we've got 3 points of contact at the top and at the bottom. So as we take a look, and I'll go ahead and I'll just pull this back a little bit easier out here to look at. So we've got a nice bottom for that rising price channel. So that's slightly higher than the trend line because we're using the body of the candle. And that says that we should see some really good support in that 1125 type area. I say 1125 is where Goldilocks is headed to. This is Steve Rhodes with TFNN. If I'm on the right clock, we'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 26, S&P down a 1.5, composite off 17. Did you get a chance to check out that debate last night? I didn't. I taped it, thought that I would, watch it, maybe today or, over the weekend or something like that out there. But I read some of the reviews out there. So it was handled by, CNBC? What's their tagline that they try to put out there? Is it number one in business or something? It sounds like from what I read out there, maybe they are number one in monkey business. But I'll determine that after I watch it out there. Hey, we were taking a look at gold before we went to the breakout here. And one of the other things that I did was first I went to the 120-minute chart. Now, put that back up on the screen out here. I've got the 30-minute chart. And on the 30-minute chart, we have this huge wide-ranging bar with accelerating volume, largest that we've had, in a long time out here. And that took place on the trading session of October the 2nd. This is about 8:30 in the morning out here. And so it says that 1136.60 is really a level where we would see the next test. I'll show you. I'll put it on the 120-minute chart. It just becomes a little bit easier to take a look at on my screen out here. Now, you'll see that the top that I've got, because I was using a 30-minute time frame, a little different than the top of the 120 bar, which is at 1140 out here. So it looks like that's really where gold is headed to next. You're trading 1147 as we speak right now. So expect that 1136 to 1141 area to really be your next place where you'd get some information. You start pulling back below that, whoever was firing away there is long gone. That then says that price comes back in that 1125-ish area that we already took a look at on the daily chart. So that's what's going on inside of gold. I am uncertain as to whether it will stop there. And the reason is because in the case of silver, what we know, we took a look at this, I think, on Monday. Commercial traders of silver futures have taken their largest net short position in like 3 years out here. And that's not typically the pattern of a metal that wants to move to higher price out here. And you've got silver trading off 74 cents. I believe it's traded 15.55. That's what we know. This is the daily chart. We can really do the same types of things in silver. First, let's go ahead and put our market profiles up on the screen. We can see that silver is below its daily. Remember, gold was not below the daily profile. Of course, the daily profile on silver was set up almost more from a bearish standpoint versus a bullish standpoint, meaning the point of control was closer to the resistance line. Silver's now, hey, busted over it busted over the top of resistance yesterday. Today you're trading below that level. But this says more likely than not, regarding market profiles, where price is headed to, would be the $15.23 level out here. Let's go ahead and put in our rising price channel. Let's again use the body. In this case, we'll use the body of the candle from August 26th out here. That looks like a good spot. Probably right about there is a good level. And then how about that? Right along the top, resistance yesterday found right there as well. So if we take a look at it, we just go ahead and pull this little rising price channel back out here. It says silver has a long ways to go. The next stop for potential support is $15.23. That's the top of the weekly box out here. And down below that in the 1490-ish area, that would be the top of the rising price channel. So I'm the bottom of the rising price channel, the house of the rising sun. So if the bottom of that rising price channel fails, then that says all bets are off. Then you start taking a look at other retracement levels, such as from the low of August 26 to yesterday's high. And you'd say if we see a move below 1487, silver's likely headed back to the 1395 area out here. But silver, which is the one, and I'll show you for those of you that didn't see it. If this is your first time viewer, listener, let's go. Let me see if I can put that chart back up on the screen out here. The chart I'm referring to is what commercial traders of silver futures are doing out here. Here is the commitment of traders data, and what we can see is the last time that they had this large of a net short position. We're always evaluating their position as it refers to percentage of open interest and net short. The last time that they were up at this level was back in December of 2012 out here. So we're almost at December, so 3 years. It's taken them 3 years to get back to this level out here. In the past, when they've gotten up to these levels, it's put in a relatively decent top out here. That's why I say this is likely to be much more than just your garden variety type retracement inside of these metals out here. Now, what would be ideal is to see these things coming back with light volume. So let's just actually go check out, see what the GLD and the SLV are doing, try to get some type of feel. And today we see some pretty nice volume, light volume, I would say, to the downside. So that's pretty good. You've done 3 million contracts out here. What you'd like to see is price erosion coming back on light volume to those areas that we took a look at. And then we can fire away again at the metals. Dow's off 35, S&P's down 2. Be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization automation capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back to the show, folks. We took a look at gold. We took a look at silver. We looked at the futures contract, daily futures contracts. Let's take a look at some of the mining stocks because we've got a mixed bag out here. And by mixed bag, if we take a look at Gold Corp, so those of you that are holding on to the GDX, Gold Corp is one of the top, if not, is one of the top 5 equities inside of that, and that would be a reason that you're getting a pounding today. If we take a look at Gold Corp, yesterday it moved lower with volume. Today is with even more volume. Now, I don't know if there's any news on it. Is there any news? They were out with their numbers. So the revenue is $1.3 billion versus 1.08. So they beat on the top line, but they've got a wider loss out here. In any event, what the most fundamental thing is, forget about the fundamentals of their financial statements, what our shareholders doing. That's the fundamental that you and I like to make sure that we pay attention to. In this case here, sellers are abandoning ship and prices below. We saw that the bottom of the weekly box TAS market profile. That held as resistance. You're now below the bottom of the daily box, set up in a bullish configuration. You don't like to see those types of levels fail. This says that Gold Corp has just simply been consolidating out here, and says it's going to, in the consolidation box, if we turn off of our market profile, so let's do that. We'll just simply draw in the actual box. You know, here is the, here in essence is the box for, you know, probably put it right there. You can put it a little bit lower. We'll just put it a little bit lower. That is the consolidation box now for Gold Corp. So very likely headed back to the bottom, which would be about the 1195 area. And so Gold Corp, again, if I take a look at the GDX, let me pull that up on the screen out here. Partner link, GDX, and we'll see what their weighting is inside of, so Gold Corp, yeah, they're the number one weighting at 7.6% out here of the, let's take a look at the other ones. Let me just turn this, I'll just pull this off the screen. So you got Newmont Mining, NEM. Let's go see what Newmont Mining is doing out here, NEM. And whereas before we saw the pull, well, whereas a week ago, it looked like the GDX, the mining sector, might be a good play when and if the metals find a bottom out here. Gold Corp is saying not so fast, for sure. And if we take a look at Newmont Mining, what has Newmont Mining done? Newmont Mining has found resistance at this open gap, this little window out here that took place on the trading session of July 20th. That had 20 million shares. That area was tested with 12 million 2 days ago. Today, it's being tested with 7 million shares. So this is acting as resistance. Now, if you look at the stock on a daily basis, it looks pretty good, you know, comparatively speaking out here. Now, I don't know if they were out with any numbers. Let's go see here. Newmont Mining, yeah, they were out with numbers, 2 billion in revenues versus 1.7, but their earnings per share lower than the prior year. So I'm not sure what it is that was pushing the stock higher, but it's running into a wall of resistance. And if it can't bust them up, Newmont Mining could easily try to break it to the downside. Just let's see where the TAS profiles are on this. Okay, so it's actually found some pretty good support at the top of the daily, top of the weekly. And that means in the case of Newmont Mining, if you see this thing start to pull back below 1941 is what we'll call it, well, you should anticipate it's moved to about the 1774 to 1690 level inside of Newmont Mining. That is a 6.3% weighting inside of the GDX. If we take a look at Barrick Gold, that's number 3. That's 5.6% out here. Let's go see what it is doing. It looks pretty good, but the same pattern out here, right? We can see this open window. Windows are your friend out here, both to the upside and to the downside. They act as support or resistance. In this case here, it's pièce de résistance, and that means that's at the 846 level. Whoops, didn't mean to put that line out there. So 846 has acted as resistance. Last time that it was up here, now to the downside, when it's going against 51 million shares, that was tested back in August 20th, 28 million shares. Yesterday, 30 million shares out here. So it, you know, it doesn't have the steam and the energy. Likely, ABX, Barrick Gold, ought to get back to about 693. If it can find some good support there on light volume, that would be good for Barrick Gold. Let's do the last one here. Let's do Franco-Nevada. FNV is the ticker symbol. So we've got, by just looking at those 4 equities, see, 7, 6, 13, 23, 24, 25. 4 equities out of 35 represent 25% of the weighting structure. You know, so that's a big influence on, you know, Nugget or the opposite, right? So the bullish, the bearish side. And if we take a look at Franco-Nevada, that's pulling back today, back into its TAS box out here, which suggests to me that 48.02 is now game. And he closed below the price point. It's trading really right at it right now. And it closed below 51.40. You're at 51.27. Suggests that we pull back to that area. Now, volume today so far, 656,000 shares. Yesterday had made a new high with 1.6 million shares, so looks pretty good. Looks, you know, not too shabby out here. It's what you'd want to see, you know, because you can deal with Gold Corp blowing apart and these others holding up pretty well. But so we've given you the profiles. Let's do one other one out here. Where is Agnico Eagle? Agnico Eagle is 5%. That's number, looks like about number 8 from a percentage standpoint. Let's go see how this is pulling back here today. See what we've got from a volume standpoint, where it's at in its TAS profiles. Looks pretty good out here. It has today's volume so far, 2.2 million shares. Yesterday was moved really lower with 3.6 million shares. And that's going into 5. So, AEM, if it can hold up here and find support at 27.36, not too shabby. If it falls below that, expect a price move down to about 25.91. So that covers the mining sector for you, I think, in a good enough way out there. Let's take a peek in at the price oscillators, the summation index. I know that you've heard me and you're tired of hearing me because you're blue in the face out here. Sacre bleu. And but if we take a look at it, the blue lines on my chart, what you're going to see down at the bottom panel is we still have this declining price oscillator. And I can tell you that it only ends 2 ways out there. The good way is you see great breadth, market breadth, and it takes out the highs and you run to the moon, Alice. But we're not there yet. So the preponderance of evidence says this only ends one way. And I don't know what it is that's going to be the news driver that, where all the king's horses and all the king's men can't put Humpty back together again. This thing is going to fall off a wall. And it's probably going to really just crack the heck out of the eggshells out there. And this is just not the type of pattern that bulls want to see out here. Like I say, it can be resolved, but it hasn't been resolved for how far back? We go back to October 8th. Today is October 29th. The longer this builds up, you know how Tom talks about building cars? Building cause out there, right? This thing is building cause to just simply, bust it to the downside. So it looks to me like we're in for a steep fall. Now, where is a steep fall? Inside the markets. Here is the danger. And the danger is we've got these gaps out here. So if why is it that the world markets have not taken the cue? First, we had the cue last week. These are the things that make you say, something to think about, right? Because we had, was it Friday of last week? I think it was Friday, where we had Thursday, we had Bernanke. Thursday, we had, Bernanke's just making money off of his book tour, right? We had Mario Draghi. So I don't remember which day of the week. We had Mario Draghi. We had China basically saying liquidity to the moon out there. And yet their markets can't get going. And yesterday, you take a look at how our markets responded to the Fed, just absolutely pushing higher. And they couldn't get going. The DAX finished off about 31 points. You'd say no big deal out here. This is a monthly chart. That doesn't do us a lot of good. And even on the daily, it looks okay. But the question is, why hasn't it taken off to the upside? No bearish reversal signal to speak of as we take a look at the DAX, but it's only made it up to its 0.786 retracement out here. Their views, maybe it's because the DAX knows what you and I know, and that Mario Draghi is just full of it. And so they're not so fast with regard to what he says. They like to see what he actually does out there. The FTSE, 42 points out here, and the FTSE really just coming up against a trend line, in essence, off of the May 29th high out here. So, it hasn't busted out, that is for sure. And if we go take a look at the Shanghai up 12 points, no big deal. That thing's just moving sideways. It's saying, I don't care how many more kids that you say they can have next door. So what? You can have 2 kids. I was speaking to a friend of mine whose father owns a small business, about 200 employees in the steel business over there. Been in the business forever. And they actually closed it down. They just shuttled it. They'll bring it back up if the demand is out there. And it's in one of the larger cities. And they just simply said, it's not there. So, that's real boots on the ground with regard to what's going on truly over there. And he says, yeah, it is a bad deal with regard to how people were just taken to the cleaners who invested money in the stock market. So that's just, if you take a look at even the Nikkei out here, and they're flush with cash. This market has done diddly over the last 4 or 5 days. So this does not have a happy ending. This has a bad ending out here. Today, right now, as we speak, price oscillator is just about at the 0 level on the New York Stock Exchange, still slightly above 0 in the NASDAQ Composite. Even the Dow is getting down close to the bottom of that range out there, that 0 line. So it's not there yet. But I've seen this rodeo before. Now, the real problem is if things really were to get out of hand out here, you could actually have a island top out here in the S&P, in the NASDAQ composite. I don't anticipate that's what's going to happen in the Dow. You could truly get that. You'd more likely see it in the ETFs out here. And the reason why I say that is we go take a look at the ETFs, take a look at the Qs as one example out here, right? It's not going to fall apart today, but the Qs are trading at 113.71. In order for an island reversal to occur, let's say tomorrow morning, I'm not saying that's going to happen tomorrow morning, all you need to do is see the Qs open below 112.07. Below 112.07. That's not out of the realm of possibility, and that creates your island top at near the all-time high inside of the Qs out there. Now, what does that say? Like any pattern, if you get any kind of reversal signal pattern, what have you, it says you go back at least to the next swing point. So that's 99.56. May not seem like a lot of pain, but remember that's September 29th area where we came off of the bottom in a big way. Now, if we ever see a close below that September 29th level, that's when all holy heck will break loose. And we'll go back to the original belief that the markets will move lower into like April of next year. So that September 29th level is, in my opinion, is absolutely the most important low. It is not August 24th any longer. That low, I don't really care about that low. The low that we should be paying attention to is that September 29th low. That sucker gets broken. Then all those trend lines that we've looked at, you and I have looked at over time on the longer term charts, they'll eventually get broken out there, and we'll be in for a pretty bad scene. And so let's take a look at what the IWM. Let's look at the IWM out here. The IWM, we don't have to worry about any kind of island reversal out here because it really hasn't done anything either, right? The IWM, really what it should do, and it may do this, if we're just to go ahead and pay attention to just the ETF structure out here, we can say that it moved into the September 17th swing point that had 50 million shares out there, and you moved into it with volume yesterday, 65 million shares. It closed inside there. Unfortunately, today you're getting a rejection of that swing point. So I don't know. It hasn't really made up its mind what it wants to do out here. Look, the Russell 2000, if it can't bust them up, it'll get back down to its lows in that September 29th level out here. So I don't know if yesterday was a one-hit wonder out here. We get a trifecta going with those price oscillators below zero, and then you get some follow through the next day. It won't be too long before you have the IBD. They're going to be late on the call, but it won't be too long before they have market under pressure and then eventually market in correction out there. If we take a look at the SPYs could easily form a island top out here. All they would need to do really is open below and not to trade above it. Open below 205.79. May not be tomorrow. May not even be Monday out here, but as long as this island top is out here, it really becomes somewhat dangerous. You'd prefer, quite frankly, that from the bullish side, you prefer to see price pull back, close that gap, and then go ahead and move higher out there. And that may be what the outcome is. But right now, there are problems in not just River City, but right here in these indices. It is just not good. It would be okay if we had, one of the indices or maybe even two of the indices only making declining tops out here. Then we could say, okay, we can get past this. But you got all three that are actually sending you it's not even a subtle signal anymore out here. What are the diamonds doing? The diamonds have made the 1-to-1 A to B equals C to the upside. That price projection was 178.06. You made a high yesterday of 178. What was it? 178.18. No, 177.68. Yeah, for all intents and purposes, it has gone ahead and completed its Gartley sell pattern out here. No reversal just yet, but it too could form an island top. All that we need to do is open below 175.37. We get back from this breakout here. Let's go take a look at the IBB. Let's go see what it's doing, some of its components out here. The case of the IBB, it's trading at 331.42 as we speak right now. It's made its way back. It's clawed its way back out here, but right into resistance. So it's done it with some light volume. The good news, it's above 326.04. Steve Rhodes with TFNN.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD. Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Good back, folks. Dow's off 57, S&P's off 5. Real quickly, we didn't look at any individual stocks, so we'll do that during the last 4 minutes out here. But we'll go back to the IBB, one of the culprits that began truly driving the markets lower out here. And if we come back to the swing point from July 20th, that's when the Dow made its first high was on May 20th, the second high on July 20th, I believe, out here. If we take a look at the IBB, you can see that it has been traveling in a descending price channel. And today, it's tested the top of that channel. It's testing its 200-day exponential moving average. It has rejected both. The current candle session is a shooting star. I do not know whether it's going to end up being a shooting star at the end of the day, but you've got a bearish candle showing up at resistance. Every time else up at resistance, we've seen a bearish candle. You saw a nice bearish engulfing session, a huge one on September 21st. That was after price had hit the top of the descending price channel on the 17th and the 18th. We saw the same thing after a little doji candle on August 5th to help go ahead and cement this descending price channel, big wide ranging bar to the downside on August 6th out here. And so today inside the IBB, you've got another potential reversal signal. All depends on what happens over the course of the next couple hours out here. We may end up not even getting a bearish reversal signal when all is said and done. But of course, you've either got a shooting star or you could get a bearish engulfing just simply with a close below inside the IBB of 326.86 out there. You're at 328.87 right now. So, maybe that's another indicator as to what's going on. Take a look at some of these stocks here that have just simply blown apart. And this is what I'm really talking about with regard to our markets as well. It's not going to end pretty out here. And I know that I am in the minority. I don't really care. There are too many secrets. Now, there's not too many secrets. What there is there are too many diverging patterns out here, all of which have a outcome. And they've all teamed up and gotten together to just say, I don't know where it's going to come from and what it's going to be, but it is likely not going to be very pretty out here. In the case of Buffalo Wild Wings, just a psychotic stock out here. This is headed back to a breakout session. Today what it did, this is a huge island top reversal inside of Buffalo Wild Wings. But it's going to come back probably to the level of about 136.60, maybe beyond that. It's at 150 as we speak right now, but blowing apart with volume as we speak. You got ABMD as the ticker symbol, blowing apart with huge volume out here. Where's this thing headed back to? It's probably headed all the way back to its original breakout back in October of 2014 around the $26 area. You're at $70 right now. So this has got big volume coming out of it. Take a look at Straight Path Communications down 40%. This thing's coming back to a breakout area. Maybe it holds $22. If it can't hold $22, then look out below. Below this thing is probably at about 9 buckaroonies. It's at 28.75 right now. If we take the top three, NXP Semiconductor, moving lower with huge volume today, largest volume day that we've seen in a long time. It is just dealing with its swing point here. Its B point of a huge A to B equals CD to the downside. That only has 9 million shares. Any close today below 72.05. And this sucker will become a sucker and move all the way down to about $54, maybe even lower than that. F5 Networks down $11. Look at this thing. This has got volume to the downside. If this does not hold the 99-ish dollar area, Lord knows where F5 Networks is headed to, but it's not good. So blowing apart with, it needs to hold the price level of 98.82 out here. Maybe that's where it finds some support, but it doesn't look good. GNC Holdings down 27% out here. Who the heck knows where this is going to, but they need some of that muscle milk or something that they sell out here. Otherwise, it's going to be milking all the shareholders down to about the $16 level out there. Folks, stay tuned. Our man David White is going to be up next. Have a terrific Thursday. I'll look forward to seeing you on Fantastic Friday. Be careful. Keep your stops in place. We'll see you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.